All right, time now for Consumer Confidential with KTLA 5's David Lazarus.
He is here in the studio. Good to see you. So the prices are sort of high with our menus when we go out to eat, right? And you're saying that a lot of people are tipping still pretty high, but shouldn't they still be tipping?
Yeah, but it's something that we've seen throughout the pandemic, that it's been a moving target. Now, according to the Bureau of Labor Statistics, the cost of dining out rose by 8% last month from a year before. Nevertheless, tipping remains very strong. This according to a report from a company called Toast, which is a digital platform for the restaurant industry. They find that average tips for dining in service are 19.6% of the bill in the second quarter, and that's 10% higher than a year ago. And as I've reported, earlier on in the pandemic, tipping sort of fell by the wayside a little bit because many people just couldn't afford it, but then it started coming back as people wanted to reward servers and others for the risks they were taking in staying on the job. We saw tipping kind of ease up earlier this year, but now obviously strong again. Interestingly, the Toast report ranks various tippers nationwide. Californians are the stingiest tippers. The average tip here in the Golden State, 17.5%. Who are the best tippers? According to this report, that would be Indiana, 21% of the bill, West Virginia, 20.8% of the bill, and Ohio, 20.7% of the bill. Not sure I buy that. Californians tend to be pretty darn good tippers. For more information on what economists say about the economic effectiveness of tipping, plus some links to my recent reports on tipping, I'll have something up at ktla.com in just a few minutes.
Great.
I was going to say I'm a good tipper, so.
I'd expect nothing less from you, my friend.
Well, let me tell you, you want good service, you tip well.
Actually, no, that's not what economists say.
No, when you go back, when you're a constant customer, they treat you well.
They will. This is true.
All right. Another sign that the housing market is hitting the brakes.
Things are tough in the housing market, which through the pandemic, it's been fairly resilient, one of the most robust elements of the economy, but not so much, at least not according to the National Association of Realtors, which finds that sales of previously owned homes fell by nearly 6% in July from the month before. And on an annual basis, July sales were down, 20% from a year ago. The Realtors Association's chief economist says the housing market has now slipped into a recession amid high prices, rising interest rates, and that's something that's going to play out clearly for both buyers and sellers. The average interest rate for a 30-year fixed mortgage was about 3% at the start of this year. Now it's closer to double that. The median price of a home sold last month was about 11% higher than a year ago. A really interesting stat here is that first-time home buyers typically account for about 40% of home sales. Now that number is down to 29% because of these high prices, high interest rates. That's pushing more of such people into the rental market, and that's pushing up rental prices. Tough times across the board.
I promise I listen when you come here on set, but I don't remember what the meme stock bubble is. You've told us. Went right over my head.
Exactly. Meme stocks are basically stocks that are getting a lot of juice from day traders and on the message boards online. They're basically stocks that are trading for no good reason whatsoever, except that people are trying to push them higher. That's a meme stock.
Thank you.
All right. So let's look at one of our favorite meme stocks, Bed Bath & Beyond. Over the past few days, it's had a huge run-up in prices as mostly the Reddit crowd has been running a pump and dump scheme to try and push share prices up, get other people in, and then they sell out below. Today, Bed Bath shares are tumbling. At last check, down by nearly 24%. This after a major investor in Bed Bath, Ryan Cohen, the chairman of GameStop, another meme stock, follows up months of talking up Bed Bath opportunities and its prospects. Today, he's filed with regulators to sell off his entire stake in Bed Bath & Beyond. We're talking more than 9 million shares. If Mr. Cohen is able to get those shares at yesterday's closing price of about $23, he's looking to net $60 million on this. I can't say this strongly enough. This is a game where you've got investors basically trying to take advantage of other investors. Don't go anywhere near either a meme stock or any stock that's showing unusual volatility, not based on any of the fundamentals. That's a place you will get burned.
Okay, meme stock, I know now.
Thank you.
I just saw some kid, though, some high school kid, bought into that,
Uh-huh.
cashed out, and made a lot of money.
$110 million I saw, but that same kid borrowed
Rare.
$25 million from friends. Friends
Oh.
like that, right?
Wow. Okay.